What's going on, apes? It's my pleasure to bring you this interview with Lisa Braganza. She's a lawyer who previously held a position as an SEC branch chief, and she now works as a trader and investor advocate. She's been closely following the class action lawsuit with Robinhood and Citadel, so I thought it would be useful to get her input on that particular class action lawsuit and all the other related matters. I really hope that you enjoy. First of all, thank you so much for joining us. I know a lot of people in the Ape Nation community are very excited for this particular talk because I feel like there's a lot of, legalese assumptions of what's going on right now in the world. And I'm sure we've seen you talking with Charles Payne on making money. And it seems like you have some very interesting and expertise level input on the legal side of what's potentially happening between brokerages, market makers, and especially as it all relates to AMC and GME. So thank you for joining the show, Mrs. Lisa Braganza. Very excited to talk to you about what's going on.
Thank you so much. I'm really thrilled to be here. This is a great topic to talk about.
Very exciting for a lot of us. And I know there's people super excited to listen to what you're about to say about all this. So let's just come out of the gate swinging. Before we get into this Robinhood and Citadel thing and that entire situation, could you briefly give people, a reasoning and kind of your background on why your input on this is a legal, legitimate expertise level input on this particular subject?
Okay. I worked at the Securities and Exchange Commission in the Division of Enforcement and have done these kinds of investigations. And since I left the SEC, I've spent about 20 years now defending people in these kinds of investigations. I also do a lot of investor advocacy. So I go to Washington and talk to Congress about unfair practices and what's happening to retail traders, and work on advocating before the SEC to have a more fair playing field for retail investors. So this is something that I do not just as my job, but it's sort of an avocation. This is what I do in my free time. So
I love that. I mean, very obviously, AMC and GME have become a historic event. I'm kind of curious, when did it come onto your radar that this wasn't just a general stock movement? When did it first come up, either of these, that you're whoa, something else is going on here?
Oh, that's a good question. I can't say exactly when, but first I started hearing about people talking on Reddit about these stocks and the impact that this was having on trading volume and on what was happening. And I have to admit, initially my reaction was, oh my God, what are they doing? This is so dangerous. These are people who are going to lose a lot of money. And because I tend, I'm older, I tend to be to think of people as investors versus traders. And so I'm, view myself as an investor advocate. And I didn't think of the AMC and the GameStop people as investors, as traders. But what's been so interesting to me is that I've come along, and if I can come along, a lot of other people can come along. And, and I understand it doesn't matter that people who are buying GameStop and buying AMC are not long-term investors. Who cares? They're entitled to the same fair playing field that Goldman Sachs gets, or that JP Morgan Chase has, and that I'm willing to advocate for that. I think that's absolutely right. And whether it's young people who are getting in and having a good time and learning something while they're going through this, or whether it's people who are investing, for retirement accounts, I don't care. I want a fair playing field for all of them.
And I feel like, obviously, a lot of the people within the community don't necessarily have that expertise, but to me, that's kind of the thing everyone's trying to get into the microphone out here is just, hey, we want the same fair, equal shot. We just want the playing field to be level. And to me, that's one of the main pillars of the ethos of the current cultural wildfire that really is AMC or GME. So it's interesting to hear that. And I'm sure many people watching right now would be more than happy to make you an honorary ape of our current community going on.
I would
Um,
love it.
so it seems in September of this year, so a lot of people since the start of the year have been, I mean, I've really almost accused of crying wolf, but we're saying, especially back in January, when Robinhood made the decision to PCO, position close only, AMC and GME. Obviously, when the entire retail trading public was mainly segmented at that brokerage just because of what was going on at that point in time, obviously that had a negative impact on these stocks. If like the retail was the group that was pushing it, if they can't buy it anymore like that, it doesn't like take much math to really add that one up. In September of this year, there was that class action lawsuit that came out, lots and lots of information in it. And many of the apes were able to catch your segment with Charles Payne there. And it seemed like you had a lot more to say. So as it relates to the class action lawsuit, Robinhood, Citadel, and maybe even specifically that president of Citadel Securities, Jim, whatever his name is, choosing to sell right before he PCO'd, like it was his decision, but he sold AMC and then he messaged out like, hey, just so you know, we're doing that with GME tomorrow. Could you give us a little bit more of a legal bearing of what's going on? It's one of those things that I know not all the time the laws don't necessarily equate to things being moral or immoral. So was this above board, below board? Could you just give us a little bit more of a legal opinion on that?
Sure. So the first thing is, Robinhood is subject to all the laws that everyone else is. So, I think it's been interesting to see them try to say in their responses to the lawsuits that the rules don't apply and individual investors can't bring claims against us for violating FINRA rules, for violating SEC regulations, and that's just nonsense. Of course, they're subject to that. What has been really interesting about this recent filing, there have been a bunch of cases that have been filed over time, but this most recent one is that it's actually, we get to peek under the hood. We now have documents, and that was the cool part about being at the SEC was, we got all kinds of secret files, and, we got to see what was going on behind the curtain. And that's what we're seeing here. We're seeing these communications that are going back and forth between Citadel, one of the Citadel entities, who knows which one, and Robinhood, one of the Robinhood entities, who knows which one. So this is happening, and this comes on the heels of these folks getting, Ken Griffin and Vlad getting up in front of Congress and saying, we weren't colluding. We weren't talking. This was all on the up and up. This was all a result of a margin call by an independent third party. Mm-hmm. Well, now we're seeing, was that party independent? I've gotten lots of messages from apes. Thank you, everyone. Pointing out to me that there's a guy from Citadel who apparently is sitting on the board of either DTCC or the NSCC. Mm-hmm. Important point, yes. That sort of takes out the independent third party. So now it's just a third party. And we see they are talking. They're not just talking. They're talking about this very issue and the fact that Citadel is going to lose its shirt. So, maybe there's other people complaining too, but then to have the defense that Citadel has raised of, hey, Robinhood just did this because of DTCC and, the margin call. I think we need to look further. I think that's not enough. There now are these messages. That is great stuff.
Now, how could if somehow there is I always refer to it as a smoking gun piece of evidence of, let's just say, and I'm throwing this out for any other lawyer, or if Ken, if you're watching, just know this is just an opinion. I'm not a lawyer by any means, but I feel like there's a very real scenario with Robinhood. Their main source of revenue is coming from payment from order flow from Citadel. If Citadel got into a bad situation, they might not have said, hey, you need to PCO those, but you might want to say something along the lines of, things aren't good. We hope something fixed. We wouldn't want your revenue to disappear overnight. So to me, when we have these market makers, which have such a sizable amount of power, you don't know how they're going to wield that power. And then yet more recently in this backlash to the class action lawsuit, we're seeing them like they're proud of it. They're like, we're the only one who provided liquidity. It's like, to me, that's not a safe system when we're relying on one private entity to like kind of do some major like overhaul and continuing the market forward in times of potential distress. I found that very, very interesting. But if it does go this way, and one of these days we have smoking gun evidence that they did use their power as in Citadel Securities against Robinhood in a way they shouldn't have, what's the possible legal backlash?
Oh, well, that's something that the SEC, I think, would land on Citadel like a ton of bricks, because that would be, and I mean, if nothing else, if you only look at this from a disclosure standpoint, then it's a Robinhood problem. And, Robinhood discloses that it gets payment for order flow. It doesn't disclose we get payment for order flow, and that means we are going to screw our retail customers when it suits the guy who's paying the bills. There's a difference there, and you can't rely on a general disclosure to cover you when you have just lopped out a bunch of traders right at the knees. So, and on Citadel's side, the SEC is looking into these kinds of relationships now. I mean, I'm excited about our new chairman, Gary Gensler, who is out there talking about there's too much trading going on in dark pools. This should not, the whole purpose of having these trading floors where a bunch of guys were running, back in my old day when I started doing this, there were a bunch of guys on a floor like running around with papers, and yelling orders to each other. That's so old school now. But, that doesn't mean that there still shouldn't be a public forum like that where the trading happens. So what gives? What happened here? And I think that is worthwhile. And Gary Gensler is willing to actually look at that and say, just because this is the way it is today doesn't mean it should be this way, and doesn't mean that I'm going to let it continue this way. So that's really good. Now you got to tell me what the heck I was talking about.
No, completely fine. So I actually have a couple of things that spin off of that. You made some very good points. So in terms of an individual person, the president of Robinhood Securities, Jim, whatever his name was, I'm seeing on some mainstream media accounts that they're saying that basically it's not that big of an issue because even though he sold, he didn't make that much of money. So like, why should we look into it? I mean, I'm no lawyer, but that's not how it works. They're not looking into if you made money or not. It's looking into if you traded on information you shouldn't have been trading on. Isn't that correct?
The issue for insider trading, it isn't just a question of how much money you made, but it is a question of whether you misappropriated or misused confidential, non-public information. Material non-public information is what the official SEC term. Whether you misuse that, because that's like stealing it from the person or entity it belongs to. You've stolen it and you've used it. Now, you might have used it and it might have worked out wonderfully. You might have used it and it might not have worked out well. But the fact is you misused it. So that's what's interesting here, is that there's an allegation of misconduct, of misusing the information, the knowledge that this, of the president, that the company's going to PCO. What puzzles me a little bit is that he sold. So it wasn't that he said, oh, I'm going to jump in and buy before nobody else can buy. I'm going to sell. Now, yeah, he's anticipating, okay, that's going to push the price down. Maybe he's going to lose money. It's just interesting that, he does something. I almost would have, but I'm not sure which way I go on that. I really have not, thought that one all the way through, I have to tell you. But the things that, when I'm talking to somebody about potential liability for insider trading, this guy is absolutely the type of person who could be liable for insider trading, because the inside information he had, it doesn't have to be from the company. It just has to be confidential. And it was confidential at Robinhood until it became public. So I think we can say that, if he traded, all the ifs, because, I can't make statements about what the facts are, but if someone in that situation did have that confidential information and did trade on it, then there is potential liability for insider trading violations. And then the question is, well, what is the consequence of that? Well, the SEC says you got to pay back the profits that you made or the losses you avoided. And, they slap on a penalty of 1, 2, or 3 times that amount. Now, criminal authorities, they could bring a case too. Insider trading is both, civil and criminal. There are charges that can be brought. So, you could end up with it. Maybe it wouldn't be a felony case, but it still could be a criminal case that reaches a certain level. So it's just sort of interesting there. And yeah, he didn't make a lot of money. He didn't lose a lot of money, or avoid losing a lot of money. But that doesn't change the core of whether it's a violation. It just does tend to affect the decision of whether the SEC would bring a case. Now, I will say, when you look at cases that the SEC brings that are small dollar amounts, they might be it's a small dollar amount, it's a big name guy. Okay. So I don't think that the fact that it's a small dollar amount is a buy for him. That doesn't get him out of it completely.
Gotcha. And okay, I have another hypothetical for you. I'm trying to think of the best way to word this. From a legal perspective of the class action lawsuit and what you know about it, in terms of Robinhood or Citadel Securities, that class action lawsuit, who do you think is currently more difficult to defend? Or maybe to put that another way, from your understanding, who do you perceive to be more legally culpable based on that class action lawsuit?
Well, there's a number of different complaints out there, so I'm a little. It's hard to say. I guess that's really what I have to answer. It's hard to say. I think that it's always easier to bring claims against a company or a person or any entity that you as a plaintiff have direct contact with. So that is going to make it easier to go after Robinhood. I will tell you, when I bring these types of claims against parties on behalf of investors, see, I say investors again, could be investors or traders, retail people. When I bring these kinds of claims, in a FINRA arbitration or otherwise, it's far quicker. It's a quicker decision for me when I say, aha, okay, the person who wronged you is this brokerage firm, rather than going behind the brokerage firm and saying, well, we're now going to bring a claim against the clearing firm. Now I have to work my way through. So it is more complicated. And then you need kind of a conspiracy, which is something they're alleging. They're saying there was an agreement or an antitrust, agreement there. And that's how you start reaching up the chain, to parties that are farther and farther removed from the ones that you've had direct contact with.
Now, even things like that, it's so frustrating from the retail side of it, just because it seems like there's so many layers that are protecting very politically motivated, influential, powerful people. It's just layers and layers and layers. And I guess with that, at least with the realm of people I deal with on a day-to-day basis, one of the most common things I hear of is, okay, like, where is the SEC? Like, I actually see that hashtag, like, where's Gary Gensler? So with it, are we off base? Like, do you think they're looking into it? Are they understaffed? Or is it one of those things that maybe an argument is they are looking into it, but you never say what you're doing. So they're trying to kind of do it in like more of like the dark alley. So they don't really spook Robinhood or Citadel Securities or anyone else who might be culpable. Like, are we completely off base? Because all I really know is like on my side of the table, it's just, hey, you're the regulators, do some regulation.
When the SEC does investigations, they are non-public. So that's why you're not seeing it. I have no doubt in my mind that the SEC is investigating this. It's so public. It's such a big deal. Congress is talking about it. Yeah. There's no way the SEC is not investigating this. The SEC keeps things confidential, for good policy reasons. I mean, let's say, the SEC sent you a subpoena and they wanted to look into your trades. You might appreciate that they didn't make that public and kind of put out a press release while they were looking at them, because they would say, oh, everything's fine here. And then they close the investigation and goes away. You don't have to then retrieve your reputation out of the dumpster. This is something, big corporations have to wrestle with all the time, because, it's never a nice thing to have to disclose that the SEC is investigating. I think Robinhood and Citadel are going to be disclosing that they're being investigated. I think that's pretty clear. I mean, they're big companies. They have to make material disclosures. I'm not sure, actually, if Citadel has to make any disclosures, but Robinhood would. And, that's I think that works, but it is correct that, it undermines. I think the bigger issue here is the fact that we don't have faith in the retail trading systems that are out there is bad. We need to have a level playing field. We could have a system, hypothetically, we could have a system where we don't have an SEC, and basically everybody goes in and it's sort of survival of the fittest, and it's just like a whole big pool of sharks, and the big sharks are going to eat the little sharks and the little fish all get eaten. Mm-hmm. And you would know that going in. You would say, wow, you know what, I'm not diving into that pool because there's no way I can make money. There's no way I'm going to survive. We don't have that system. The system we have says we are going to ensure a level playing field. And that's why we have the SEC. And that's, why we have FINRA, and we have all these other entities that say, that it's in order to maintain that level playing field. Some would say create that level playing field. But so once we have that as our goal, and we are telling people out in the world, in the US at least, that's then we got to live up to it, right? We can't say, oh no, it's really fair for Goldman Sachs and JP Morgan Chase and Merrill Lynch, but if you're a retail trader, investor, you're screwed. That's just wrong. We can't have that. And I think it's interesting when I look at what the SEC says. I think some of the disconnect is some of the disconnect that I had early on. The SEC talks about protecting the retail investor. And there's very much a focus on protecting Main Street investors. And that's really with an eye to, investing for retirement. Mm-hmm. So that's the gold standard, and that's sort of the paradigmatic person that the SEC is trying to protect. 55 years old, has saved all of her life for retirement, and has lost it, or is at risk of losing it. Our Reddit traders, our apes, are not that paradigmatic trader, investor. They're a whole different world. And I think it's going to take some time for the SEC to kind of come around to that. I think that, years ago, I felt like, hey, assumption of risk, you know what? You go in, because I know that from my work inside at the SEC and from, all the work I've done in this field, that it isn't a level playing field. But that doesn't mean that it shouldn't be a level playing field. And the fact that, I sort of threw up my hands and said, oh, but everyone knows it's not a level playing field for retail investors or retail traders even. So nobody should be doing that. And anybody who does is kind of, just in there swimming with the sharks. That's wrong. The right way to look at this is to say, look, Goldman Sachs can be out there doing their thing, and JP Morgan Chase can be out there doing its thing, and you can be out there doing your thing too. And it's all that is at the level playing field. If you are super smart and you're able to get out ahead of them, or you're able to get on Reddit and, rally the troops, more power to you. As long as you're not breaking the law, go for it. You should be able to go after profits.
And it's literally exactly that I'm sure a lot of the viewers right now, this is the one simple thing we're saying. We're like, a little bit of transparency, a little bit of fairness, give us the shot on the same field. And it's kind of weird because the pushback from it is like, well, why would you fight that fight? Like, you don't even know what you're talking about. It doesn't happen. Like, it's completely fair to begin with. And then it's almost, the frustration of it is back in January, we just saw high short interest. And we're like, well, that seems weird. And then you pull on that one thread and then you're like, you find something else out. You're like, hang on, what's this like offshore warehousing of FTDs? That doesn't make sense. And then you're seeing the connection between brokers and market makers and payment for order flow. By the time you pull through the entire string, I feel like I've gone through an entire like linen shop of like, where is this possibly going? It's just absurd. And then the way I guess we're treated in media and spoken to is just like obviously it's a disrespect. And then that's really why we've taken on the name of Ape Nation. But even recently, it's absurd things. We have people from the Federal Reserve and even just political mainstay names. They're traders and they're killing it. People who have spent their years in politics, do not have a trading background, are consistently outperforming the S&P to an ungodly number. Really, I feel like I'm losing. Does no one see this? And it's backwards in the sense that the ones who get to vote on the laws that protect them are the people who are doing it. So why would they ever vote against themselves? So, I mean, even
Absolutely.
with that, the Federal Reserve situation, and then some of just like our highest political leaders, like, what's your like? Is that insider trading? Is that illegal? Is that legal? Should it be one or the other? Can you give us a little bit more insight to like the Fed and politicians trading?
Yeah, this is really ugly. Wow. Yeah, and unfortunately, for a long time, members of Congress and their staffs were not subject to the same kind of insider trading law that everyone else was. So finally, we got the Stock Act. Okay, the Stock Act holds them to the same standard. Okay, they cannot abuse or trade on material non-public information they have. And of course, that could be so much more valuable than what any insider at a company knows. I mean, if you know about information about a new law that's going to be passed, or something in committees that you're finding out, oh my God, just which company is going to get the contract for vaccines. I mean, come on, these are huge. That is not supposed to be happening. Now, the enforcement mechanism, that's the problem. So we have, we have all kinds of laws, and we have old laws that say you shouldn't spit on the sidewalk, right? Do we enforce them? No, we don't. Here we happen to have a new law, a good law, and who's going to enforce it? Well, the SEC could, but it's sort of, remember that Robinhood and Citadel thing where, like, who pays the piper? Citadel pays Robinhood. So who's Robinhood going to listen to? Well, who pays the SEC? Congress.
Yeah.
And so there's, kind of a little tension there. Now, the SEC is an independent agency, but let's face it, the SEC's budget comes right through Congress. So there's a little bit of a dilemma there. And the SEC, it gets hauled up in front of Congress to testify all the time. So imagine what could happen to the agency if they start needling too many Congress people. So there is, I mean, this is the reality of the system that we have. Now, if we could have, individuals be able to bring these as a, have a cause of action, that would be different, then there might be enforcement. And let's be fair to the SEC. I don't want to bash them unfairly. There have been some cases against, members of Congress. They definitely have. So, it isn't that the SEC is not doing anything. I think the tough part is that, more than ties, are going to go to the Congress person. They're going to give the Congress people a whole lot of leeway on this. So it's just the reality of the system we have. It's not right. It undermines the faith that we should have in our financial markets. And that's why it should be fixed. It also undermines the faith that we have in our democracy, which is another reason it should be fixed.
Yeah, definitely. I 100% agree. Just to rewind a little bit so the viewers can look it up. The law is actually called the Stock Act. When did that come out? Just in case they want to Google it.
Oh, that's such a good question. The Stock Act, my goodness, sometime in the last 10 years, I think. But
Okay.
what I can do is get a link and I'll send it to you. And then you can, if you can put it in the somewhere.
Okay, yep, I'll make sure to drop it in the description below for
There
everyone
you go.
listening.
Yeah.
Still on the subject of the government, most recently, I was listening to a representative from Georgia who I'm not going to remember this verbatim, but his argument was along the lines of social media as it intersects with finance, as in people talking about stocks in the public digital medium. He, along the lines of basically, it was one of the greatest risks to America. And with that, like we hear that a little bit of, especially the mainstream media who's specifically against the Ape Nation movement, they love to really point out like social media and manipulation. And we hear that. And the way I look at it is like, if you're not telling anyone to buy and sell, and if it's just sharing an opinion, like we have freedom of speech, but from a legalese standpoint, how do you view the intersect of digital commentary, social media, and just the markets?
Well, first of all, you should always be able to say what you think. And that is the presumption. So if you think that a stock sucks, then you should be able to say it.
Mhm.
You don't like Tesla, you don't like something else, you should be able to say it. Now, and that's the starting point. The problem comes in when you have when you are engaged in trading yourself or you hold positions yourself, and that's that creates somewhat of a exception to the freedom of speech thing that we have. That's the legal term, the freedom of speech thing. I use official terminology all the time. So, what the SEC is entitled to go after, what, is illegal is if I go and buy a whole bunch of stock in a thinly traded company, and then I go out and tell people, this is the greatest thing since sliced bread. And then I drive the price up and then I dump it. Or I, in some ways mislead the people who I am talking to. So I don't know if you remember, but, way back a while ago, there was a big brouhaha about research analysts on Wall Street. They were issuing opinions and they were like Jack Grubman was one of them, and he would say, hey, in my opinion, this tech stock is, absolutely wonderful. Well, what we didn't know was that an important part of his compensation was allegedly investment banking revenues. Now that makes kind of a difference, right? Because again, we're in that sort of Citadel Robinhood thing where we're saying, ooh, Jack, are you doing an objective and good faith review of this stock, or are you trying to pad your wallet here?
Mhm.
So that's where you can't just always say something. Now, you also have the issue, and it's been interesting that the SEC, so far, as far as I know, has not like landed like a ton of bricks on Ape Nation, and that's a good thing. But people are now together, it's as if when you're on Reddit and you're all talking to each other, that's like we're all hanging out in the town square, yelling at each other. Okay, we're all communicating, and we might still do something illegal in that we are colluding. We are all acting in concert rather than each one of us getting out there and saying, hey, I really love this stuff. I'm going to go out and buy it. We might be saying, hey, if we all act together, like let's do this. Now, I am not aware of a collusion or a conspiracy like that a case that's ever been brought where it's all happening out in the open. I mean, the reality is, how can you have a secret? I don't even know that you can have a conspiracy if it's all out there in the open, right? The essence of but I've not looked at that, in detail to see, is there ever any, but to me, when you're looking at collusion and you're saying, okay, we're all talking to each other and acting in concert, that was something that upset so many people way back when that was all, happening. And, folks were talking about, wait, the Reddit traders, they're all out there, they're talking to each other. They're coordinating trades. And, the interesting thing to me was how could they be coordinating way out there in the open? And if they're coordinating way out in the open, then anybody can join in and can go with them or against them. Isn't transparency kind of that is, I'm not asking you, I'm telling you that transparency is an important part of our markets. The SEC's, fundamental goal, or one of its fundamental goals, is to have full disclosure. So there you are. All these Reddit traders are doing this out in the open. That's disclosure. They're not hiding it. So that's the puzzle. That's the thing I wrestle with.
It seems like I see the fine line scenario, because to me, it's not that different of if we were in that example of a town square and we were all just saying, hey, Apple sold a lot of iPhones. And then everyone's like, okay, I'm going to act on that how I want to act on that. I don't see much of a difference of people saying, hey, AMC and GME is highly shorted. Do what you want with that information. And if anything, of the point of transparency, if anything, what I see on social media is people are very happy about their positions. Like, I own this many shares. Like, they're clearly calling it out. They're like, I want it to go up. I'm in it. Let's go.
Right.
So to me, that's as transparent as you can get it. They're like clearly wearing it. They're like, hey, this is what I have.
Let's contrast that now with, are the short sellers out there, all the time talking to each other and parroting? Yes, there are times they talk to each other. But it does not tend to be on a Reddit thread. It's not on an open board where everybody, the thing we used to think about and know that went on was, the dinners where people would just kind of talk about trading strategies, those nice dinners at fancy restaurants in New York. That's not open to everyone. That's not something that all of us could just join in and say, hey, can I pull over a chair and kind of join you guys and hear what's up? They were not talking about that. Now, there have been times where companies, take Tesla, have gotten really angry about short sellers who have taken a short position and announced it. And been out there publicly saying this company is overvalued. And then you have that tension of, they're being public, they're stating what their position is. And Tesla says, no, they're trying to drive our value down to the ground. And I think that's a tough argument. I'm not aware of Tesla being successful in bringing that argument yet, but there are companies that complain about that. The short sellers are manipulating, and it depends on what they're doing. Are they having those dinners, or are they out there in the town square saying, hey, I shorted this. I think this is overvalued.
Very interesting. Very interesting. Well, overall, this has been an absolute wealth of knowledge. All of us very, very much appreciate your time. And as things develop, of course, we would love to have you back on. In the meantime, if people end up having questions or want to dive into something a bit more, what's the best way for them to get in contact with you or see the things that you're currently working on?
You can email me at Lisa, Lisa, at SEC stands for Securities and Exchange Commission, defenseattorney.com. You can hop on my website, which is www.secdefenseattorney.com. I try to make it easy to find me. And you can find me on Twitter. Lots of you have, and I'm happy to talk with you guys there. And that's at Lisa Berganza. That's it.
Right. That's awesome. And for all of you listening right now, I'll make sure to link all three of those in the description so you can easily track that down. But once again, thank you so much for your time. We truly appreciate it. And hopefully we'll be talking again soon.
Thank you so much. It's been a pleasure.